it's staying there at 100, it means optimism is staying for analysts, like bets continuing to be made overwhelming on the positive side in the long-term options markets, and price momentum factors are staying good. That's because Meta is making and we've been saying this, is making a lot of smart moves. Like what they're doing with Llama and Ollama to open source LLMs, really builds on what they did with PyTorch. They're becoming a big name in open source tech. Obviously these chips investments are good ones, but I would say Meta is a little better at building products than Google. I don't think either of them are that great, but I think Meta is a little better. And I think that, it's just one of those very, they continue to deliver and they continue to, grow consistently now, I think for the last 2 or 3 quarters, after Tesla and NVIDIA, they've been the 3rd highest growing Magnificent Seven company. Yet they're, I think, maybe the 2nd lowest PE. I think Google's the bottom, and then I think Meta's above them, and then it goes it scales up pretty fast there. So Meta continues to be a great value. It continues to look good in our signals, and they have and why we talk about Google and Meta, which we those are the only 2 tech or tech adjacent, obviously in their communication sector, that we held through this announcement. It's because Google's got the Gemini Apple story on the horizon. They're also building chips. They also have the best AI brain. We talk about that all the time. Elon Musk, for all his talking about having the best training set, he's wrong. Meta and Google both have better training sets. They're older companies. Meta especially has been having conversations on their platform for a long time. They also have Instagram's conversations. They have WhatsApp conversations. Which is beyond some people use Twitter for DMs, but WhatsApp is a wider, with all of those platforms, it's a wider thing. And they've got a deeper, longer base. And Meta's got a lot of posts and communications, and they're just they're an older company. So I think their training set is really good to build these add-on products. I'm just, they're a more stable company than Tesla. Zuckerberg, while people don't like him, he's much less likely to say something that pisses off half the country. But we should say on the risk factor side, and this is something that you very smartly bring up all the time, Stephen, there are, I'd say, especially with Meta, but also with X, but X isn't public anymore, serious election risk. That's the one thing that I think is I think Meta would be going gangbusters right now. And that's the reason that I do think it's a bit cheap on a PE ratio, because there is election risk. But hey, the way I see it is I'm riding it for another 2-3 months at least before I even consider when that election risk might impact.
So while you were speaking, we were actually able to go live on YouTube. So thank you for everybody who was on there and while everything was malfunctioning. But we are now live on Twitter and YouTube for everyone watching. Thank you for sticking around. You mentioned Elon Musk, and that brings us right into our next story. So we've covered kind of the struggles with Tesla stock and everything that's been going on with Elon Musk in the past couple of months. But we haven't really shifted our focus. And maybe this company is looking at the opportunity that Tesla's leaving vacant and kind of taking advantage. We got some Lucid delivery numbers for Q1. They delivered 1,967 vehicles, which topped the estimate of 1,745. And I thought, why not just take a look? Tesla's struggling. Maybe there's other EV companies that haven't done so well, and maybe there's an opportunity now. And I think you've mentioned before a couple times about pair trading, and I wanted to ask you, is there an interesting pair trade to be had with Tesla and Lucid?
Yeah, I mean, Lucid's still down today, but I wonder if Tesla's down more. I mean, for a good pair trade, I have to like one of the stocks. And I mean, it's very hard. And we've talked about this a lot. I just think there's a lot of risk in I mean, we saw it. We've been talking about this since before it happened, but we saw like bad sales numbers for Tesla. And like, you know, a lot of people like, and definitely people that conducted surveys, one of their biggest investors said that like, they think, you know, the way Elon Musk is impacting, you know, half the country. And I think it's important to say that. Like, I think there's people that love him, but like, I don't think you're ever going to do very well as a business pissing off half the country. But the numbers are down. We can just talk about the numbers. I don't need to speculate. Like, even if you want to say, you know what, Elon Musk has nothing to do with the numbers being down. Like, they posted some bad sales numbers, and I have no interest in going long Tesla until that problem looks like it's fixed. I just think there's just like too much risk and like whatever, like too much volatility. Like either way, like what I think the markets popped on like a Friday because of like something that happened with like cryptocurrency in Tesla. I forgot what it was. It was like some weird thing, some weird story that made them pop. But anyway, yeah, I think that it's just too much volatility. Like whether people like him or like, you know, like what is happening or don't, like there's just, I don't really like to invest in stocks. And this is why I got down on Meta so much in the first place. And love it now. I don't really like to invest in stocks where headlines that aren't even necessarily about the business are moving the stock. And I think we're seeing that. And yeah, I just that makes me very nervous. And I think that it's really hard to wrap my head around what the right thing to do is. And that makes it tough. And in terms of like the pair trade, yeah, I mean, I'm just worried about EVs right now in general. Like, I mean, I think I have a mind to say like, oh, I like Chinese EVs, and that's true. I like Chinese EVs, I think, more than American EVs, like for the same reason that, you know, people like other, like, you know, other goods coming from China, they're just going to be cheaper. Like, and I think cost is important, especially when you're rolling out new technology. So I think that part is like super important. And then, you know, we basically have, you know, all of these American ones that I'm just not too excited. Like Lucid's okay. Like Tesla, like I named the risks there. So, I mean, to have a good pair trade, like I'm shorting Lucid right now in my model portfolio. Like if I had any trade here, it would probably be shorting Lucid. But, you know, I will say on the Lucid story, like, congratulations, you're actually making cars now. I feel like there was a joke that like for a while that Lucid wasn't even a car company. They were like a marketing and design company. You know, now they're a real car company, and I will give them that. But it's just like, yeah, there's nothing harder to do, and this is what makes biotech so challenging. There's nothing harder to do than forecast a company whose sales aren't there yet, right? It could blow up either way, and why I wouldn't do a short of Lucid in my high conviction portfolio, because like you never know when people are just going to start trading on the optimism even without the sales, and you also never know when like kind of concerning events will like cause these stocks to get hammered by people that are saying, you know, they aren't profitable enough, they aren't far enough along in the line. And like, yeah, that's why I actually view some of these EV companies very similarly to how I view biotech companies, which is that like if I'm in a risk on mode, I'll short them. But it's just very challenging for me to go long any stock that I see that much risk in.
So on Monday, I believe we looked at booking stock. I'm not sure if we added it. I don't think we did. But I saw this story from Delta today, and they reported decent earnings, and then they stressed how strong they expect travel demand to be this summer. And I thought maybe we should talk about like the travel industry. You know, with inflation remaining a bit more sticky, that would lead me to believe that the economy is going to remain slightly stronger maybe than people expect. So maybe, you know, like airlines, cruises, booking, Airbnb. Are any of those travel-related industries interesting to you? as you're shifting your focus from like AI large cap growth to other areas of the market?
I haven't looked at Airbnb in a while. I want to kind of take a look. We were shorting it a little for a month. We thought it was a little overvalued. Yeah, I mean, it hasn't really recovered. Downside breakout higher than upside breakout. I mean, I generally think that Booking is a great company. They run efficiently. Yeah, it's 100 on our profitability rating right now. They operate really efficiently. They don't waste. I think they're smart with their strategies. But yeah, I think that it's just a little hard to be optimistic on any consumer spending thing right now, because like by the time we're talking about this story, right, where we're talking about like consumer spending being good, like I always feel like that's baked into the price already. And then it's just like if the numbers disappoint at all, which they might, then that stock is in trouble. Like I am just like much quicker to short consumer cyclical right now. I think Booking, I think that's the only consumer cyclical stock that's in my risk on portfolio right now. I'm just not like, even on days when consumer cyclical is doing well, I'm just not all that interested. I'm looking at my portfolio now, and I'm just not all that interested because I have Mercado Libre too, Chipotle, but I really like all those stocks. But out of a pretty big portfolio, I would say I'm not all that interested because it's just very hard to bet long on a stock right now bet very long on a stock right now when I just think any day there could be concerning, interest rate news concerning, like we could finally see the raises start to catch up more. We could finally see the debt start to catch up more. It's just hard for me to feel safe going long a stock, especially in, say, my higher conviction, smaller portfolio. Something that like news of like bad news for that wouldn't be surprising at all. So it's just challenging. I think I do pair trade in consumer cyclical. Like right now, I probably have like at least 10 short names and then those 3 long names in it. So like I am hedging that way, like just in case consumer cyclical does do well, I have my names that I like to like eat into that risk a little bit. But yeah, I mean, I pick on it for a reason. It's just like, as optimistic as anyone says they are, like if anything, that scares me a little more, because it could mean that if this does start impacting, we're going to be impacting already optimistic numbers that could really be dragged down.
So a little while back, we were talking about Microsoft, and you mentioned how they're better at, managing relationships than most companies. Maybe they're the best in the world. And I saw this story, and I thought it built on that point perfectly. And it kind of reminded me, like I forgot that Microsoft acquired Activision Blizzard. I remember they were trying to stop it. There was a lot of like risk going into it, but I felt like it kind of just got swept under the rug, and they actually acquired them last October, which when I read the story, I was like, oh yeah, that actually happened. But it was about their gaming segment and about how Activision Blizzard had a problem with NetEase, which was like a large Chinese gaming developer that had resulted in all of their games that were developed by Activision getting banned because of a rights dispute. And now after 5 months of being with Microsoft, they're all being allowed back in China, and the relationship has been mended. And it kind of plays to your point about how Microsoft probably, knew what deals to be done and how to work things. And Microsoft's gaming is like underlooked, I feel like. Like I almost forgot that whole deal happened. It's crazy.
Yeah, I actually forgot that too. And I was like, oh, well, I mean, I didn't forget it. I just was like, oh, I thought it was blocked. But yeah, I think that it's a little interesting that it happened so quickly. I mean, what I was just kind of thinking of is, hey, I wonder if the private equity, like, I wonder if there's Chinese private equity investors that got involved in Microsoft. Because I was like, I wonder how deep those connections are venture. That's like probably an interesting thing to look at. Or if they just have like better relationship shareholders. I mean, you can never underestimate the value of even just like a Chinese hedge fund owning Microsoft stock and doing well for many years. And, having an open channel. We always talk about how important information is in investing. So if you're a Chinese hedge fund and, Bill Gates always talked to you, and always gave you, good info, good insights, helped you make your investment decisions, over the years, that's going to build a lot of rapport. And we're highlighting that because it's just that's how Microsoft gets things done. They're amazing diplomats. They know how to deliver products at scale and embed themselves in environments. And yeah, I just would not be surprised to hear any of those things. And it's okay, well, couldn't Activision Blizzard do that? It's yeah, they could, but that's kind of the difference between being a company that Microsoft acquires and being Microsoft. When you are that mega cap company, everyone is going to want to get information from you. Everybody's going to want to invest in you. There's nothing more, there's a reason, as a slight divergence, there's a reason why a lot of my longs are larger mega cap and a lot of my shorts are mid or small cap. It's just there's just less risk of some smaller mid cap can get out of hand, go the other way quickly if there's a news event or whatever, because that can swing the stock a lot. But there's just what I like better about mid and small cap is there's less risk of it just going up for no reason. And that's what always happens with the mega cap stocks. If anything, they need to get horrible news for them. Even when you hear bad regulatory things for Google or Meta, it might lose a couple percent in a day. Versus bad news for one of the mid and small caps, and they could easily go that direction. And there's just when you're a more mature business, just there's just more momentum forward. It's harder to screw up in the sense of if there's any risk of bankruptcy or going under or having difficulty raising capital, those are all much bigger concerns for mid and small cap stocks than they are for large or mega cap stocks. And yeah, the other thing beyond what I'm just talking about the business security, stability, whatever, there's also just better options data that we use in our underlying formulas that I think I can just get a much better handle on when the market is very bullish on these tech names that I've watched forever, watching our signals forever, watch every day. Then I can mid or small cap longs that among other things, are just not going to have as many institutions care about them, invest in options in them.
And that's going to wrap up our segments and topics for today. I hope everybody watching learned and got some value out of what we covered. If you have any questions, just feel free to comment them. But I think we're going to do our switch over now, and we'll begin the model portfolio update.
Yep. I don't want to carry two glasses, Stephen. Don't laugh at me. I just have this one I want to carry. All right, bye.
Yep. I'll see you. All right. Sorry for everybody who's watching on YouTube who, I think about the first 20 minutes of the stream, something got messed up with our streaming software that connects to YouTube, but it finally got fixed. So if you stuck around, big props to you, comment, because I want to know who you are, because you guys are one of our top viewers. So let us know. But I'll give you guys a QQQ and SPY update before we start the model portfolio update. I would assume we're making some kind of more bearish pivot today, whether that would be adding shorts or cutting longs, but who knows? The QQQ is currently at a 35 net options sentiment. So honestly, it did not even drop too much after the news this morning, because I believe on Monday when we were looking, it was in the low 30s, or I think it started at 38 and ended in the low 30s. So it's kind of right in the middle. of where it was then. And the SPY net option sentiment is still at 50, and on Monday it was at 51. So not a crazy drop in net option sentiment. I think there's a lot of competing narratives, and if you look at our socials, Instagram, TikTok, even YouTube Shorts, we posted earlier about 2 o'clock about how the algorithms and market dynamics are competing and battling out to test what levels the market is going to really hold. So maybe that's still continuing even after the CPI data. It doesn't look like it dropped the net option sentiment too much.
Yeah, sorry, one time.
No problem, George. So do you think what are you thinking going into this model portfolio update? Are we adding shorts? Are we cutting longs? Are we doing something else?
I don't quite know. I don't quite know yet. I think
Just
I'm gonna get it all set up a little here. I think I want to just like, because there's any time like we have like a major event like that, my first instinct is always to look for new losers, look for new underperformers. Like that is just always a really obvious thing, because like numbers are going to swing on an event like this. It's silly if they don't. Sometimes they're swinging multiple times. But yes, I'm trying to multitask here. I did actually smartly update like the cap and growth thing today. So I'm a step ahead of the game. I pre-prepared that. But yeah, I will likely trim. I'm gonna check this out. Like, so interesting. Like, I think like, yeah, I definitely am gonna pull. Well, I don't need to pull. I think, where did I say it? Pull a line from last week. Yep. See, look, I'm posting this at the top. That was a very good call on the real estate. Posting the sectors. All right, patting ourselves on the back a little bit. Going to take a look at the sectors, like real estate. Obviously, like we're just gonna probably hold water. We might take one new name there. I don't know. We'll think about it. I'll kind of look a little bit about the momentum in that. It is kind of funny to see like the second best at negative 0.36 today. Like, for all of that, like this is the only green. We've seen some green stocks. Like, obviously we located some good ones, and obviously we have, like, if you look, CEG, SMCI, Meta, Lilly, ETN, Fang, like those are all our high conviction longs, like right there in a market that everything else was down. So yeah, it was a good day for us. And we dropped Nvidia like pre-market. It could have been even better, but one of the things, I am going to write a letter later. One of the things that we talk about there is that it's just like, sometimes people ask me if I regret things like that. Like, oh, are you kicking yourself for doing that or something like that? And the answer is no. And the reason the answer is no is that I don't, like, I'm happy I de-risked. Like, I think, like, we always talk about process, not outcome. Like, if I didn't de-risk and the market went the other way, I could be looking at under 100% on the year above the S&P 500. And, instead of looking at under 100%, I'm looking at back close to 150 over. So yeah, I mean, could I have been closer to like 175, maybe even 200 if I didn't de-risk and I held on to like my higher risk stocks? Sure. But I'm like, and this is the best lesson I could ever teach. Like, I'm always grateful any day I make it out of like a tough situation like today as like a winner. Like, the last thing I do is second guess myself on where I could have had more gains. I'm just happy that I avoided probably the losses that a lot of people ran into today. And yeah, that was a big thing. I also say, I was also pretty worried about these small cap ones, and I didn't like get out, and large cap came back. So okay, that's done. Okay, done with that. Now let's start diving into the individual names. Anything flipping? Wow. Melly is like, I don't know what's going on. I'm a little weirded out by that, but I keep on forgetting to trim. I want to trim one of the IWMs. Actually, I just don't. One. We'll take a look at it tomorrow. Melly is just like having this like through the floor net option sentiment, and my trading view is not cooperating. Through the floor net option sentiment, and I almost shorted every yesterday in the I shorted it in the model portfolio. I almost shorted it in the high conviction thing, but I was actually looking for another casino to pair them that look good, and maybe I should have taken that as an indication. But we were being pretty conservative. All right, let's see what is going on with Melly. It's going up. I'm on the 4 hour. Let's look at the daily. Yeah, I'm just out. Sorry, Melly. And I think that might be all that we were doing there, because I really trimmed longs. I don't want to be too aggressive in getting rid of that. Ugh. I think I want to hold BlackRock though. ANET, Amazon's doing well. Yeah, not seeing any changes that I want to make. I do think I'll probably add another SMCI. But let's see anything here. Oh, SLVM. Interesting. I have a lot of those. And it started to like really ramp up. Oh, that is still looking good. I don't think any reason to get out of that. SBGI. Oh, that's looking a little concerning, but yeah, might want to, not on the long term. Might want to keep our eye on that. Anything else? Navi, interesting. I haven't even looked at it. Must have had very low net option sentiment numbers. There. Oh, it's turning around a little. Yeah. Maybe we want to get out of that. Can you talk to me about the trend on net option sentiment for Navi?
Navi is at 42. Oh no, they're at 47. They opened at 42. They're slightly uptrending, but they hit 50 and get rejected every time, basically.
Okay, that's thing. KSS. GWN. IRT. Yep, this is one of the real estate names that we just. What's going on with this? These finance ones are looking particularly strong. Not maybe because people are like, that's always something that I see. When I see a stock down like 6% and net option sentiment start to creep up, that just tells me that people are starting to maybe see some value there. I think I might get out of. Are we winning on those AGCO positions? I think they might both be losses.
It's a loss, and yes, both are losses.
All right, trimming a little bit. Let's pull up the. This is. I don't know why this keeps happening. It moves every time it moves down. Okay. Oh no, what did I had no idea what was up on the page, so I'm not risking it. But I will be right back.
Spiky Dude's asking about SMCI and what signals in SMCI would make us add it. I do see net options maybe going up, but downside breakout is as well. I guess we'll look at SMCI and we can show them.
Yeah, I think that. Why is it? Oh, you're gonna be annoying like this? Ugh, God. You get WinZip and it just costs you time. It's really gonna put me up against it. I don't think I even have time. Can you look at Costco in Prospero? I think I might just go look at Costco and Elf. I think we might go old school and just check out if those are doing well.
Costco's at 48. It was at 47 before. It's hitting lower highs.
No, that's not going to do it. How about Elf?
Elf?
Yeah.
Elf is at 65. It's uptrending pretty good, pretty nicely.
All right, we got it. We're adding it.
I saw Elf stock dipped, so maybe there's some value, like you were saying.
Exactly. It might have gone back. We'll do 2 Elves. That'll save us a little time, so we don't have to like do any sector stuff here, and we can just get to the end. I feel like I'm missing a signal. That's going to cost me, but we'll. No, that's about what I'd expect the numbers to be. Ooh, look at this. Maybe I wasn't wrong to like get rid of like both Nvidia and Broadcom like tip the scales on the on short pressure, really ramping up. So not a bad decision. It looks. Oh, I did. What did I forget? Wait, did we? This is the long one. Wait, I wanted to do dark pool this whole time. Oh, we're gonna run out of time. We're not gonna do the screener. We just want to do. I don't know why it's doing. get some additional exposure there. How's CRM doing in Prospero?
CRM net option sentiment is spiking. It's up to 80. It was at 47 just a few days ago. Yesterday, actually. It's a new high.
Okay, I think that's good. All right, what do we have here? Anything new? What's IAC? IAC MPW. I don't know which one I forgot. All right, IAC we're adding. All right, gotta get this out. Ooh, I don't like the looks of that. Oh, it's real estate. I don't know if we want to load up on more real estate. P10, IAC. I bet this did badly today. Oh, really? No, P10, IA. Oh, whatever. Let's just get this out. All right. All right. Well, let's not lie about this. What is QQ at? Net option sentiment?
QQQ is at 30. Oh, it's up to 40.
Okay. Boy, what a long day. I think I got a busy afternoon. Spiky dude, I'll answer more. Well, I'll take a quick look at SMCI. Honestly, the SMCI thing was just an instinct where it's just like SMCI is the most risk sensitive chip stock, right? So when I saw people taking risk off this morning, I just know that SMCI is going to be one of the big beneficiaries of that. I mean, there was nothing. Sometimes I have to go before, like I did that before Prospero's first update. But if you do look, SMCI did kind of bottom out at 67 and had been going up. So it was in a bit of an uptrend, even opening the day, like even before the day. Even at close yesterday, it was at 70. So yeah, my instinct was very much like people might be ready to get back in SMCI. All right.
Yeah.
I think
So it seems like, QQQ net options ending at 40, SPY 51. We still are on wait and see, it kind of seems like.
Yeah, I mean, that is like, I was actually going to maybe switch to a bear screener in Prospero, but now I don't think I can do that. So we'll see. But for now, I got to go. Thanks for coming, everyone.
Thanks for joining, George. Thanks, everybody, for watching. We'll be back Monday, 11 a.m. See everybody there. Bye for now. Thanks for coming, everybody.